Sunil Subramaniam is with us. You got he's CEO with Sundaram Mutual Fund. Thanks very much, Mr. Subramaniam. I appreciate you joining us.
Morning.
I'm not going to ask you about what Subramaniam Swamy said. I'm going to ask you about markets. We do touch base once a month to discuss the equity inflow, outflow picture, and we did so for the last month as well, the last numbers that we got. But I want your thoughts and advice for our viewers as far as what to do in terms of fund allocation is concerned. What is the way to go? I spoke with a fund manager with Birla yesterday. He said, well, one should look at multi-cap funds. I mean, as a fund guy, what do you suggest?
I do agree with that perspective, that this is the time for you to be more multi-cap, more diversified. Whereas, you know, as a company, we are very strong on the mid-caps, and generally I'm out there saying mid-caps are always very good, especially when the economy is rising. But I think a multi-cap approach is good at this point for certain reasons. Compared to a year back, right? And a year back, we were saying only mid-caps, okay? For the reason that large caps were highly valued, consumption which dominates the large cap space was not clearly visible, and valuations of certain key sectors in the mid cap space were very, very attractive. Industrials, cyclicals. Now the situation, if you see, is that thanks to the budget, I think the process started with the budget, with this huge allocation of money to rural infrastructure, the announcement of OROP, the announcement of the pay commission, and the reasonably good monsoon prospects ahead. We feel that rural consumption, for example, is going to be a big booster this season. So if you are playing consumption, then some amount of large caps do come into play. So a multi-cap approach at this point in time, with a tilt towards the rural side, right? Those funds which are, I think, incrementally allocating more to rural will probably deliver better in terms of the fact that the true potential of rural spend, whether it's infrastructure, whether it's non-farm sector, employment generation through roads and other things being built in rural India. And there are so many surprising facts which come out. For example, the fact is that even the pay commission, right? 55% of employees of the government of India and public sector work in semi-urban and rural India. So I think the consumption story coming back means that a lot of the consumption is probably in the larger companies. So I think a multi-cap approach would be a...
To go back to basics, what is multi-cap really? I mean,
multi-cap,
market cap agnostic. Is that how you describe it?
No, I would say largely say, if you say a 50-50, 50% to large caps and 50% to mid and small caps in market cap terms. In number of stocks, it would be 70% to mid and small cap stocks and maybe 25-30% to large cap stocks, because given the relative market weights.
Doesn't it make sense to kind of sort of follow this approach, multi-cap type of approach in any market?
I'll tell you where the thing arises. A large cap play is largely, if you see most funds, and I'm talking about mutual fund flows, are measured against specific benchmarks. So if your large cap funds are either measured against Nifty, Sensex, or let's say BSE 100, right, where the sectoral play is very critical, because the Sensex, the stocks which are in the index are based on certain rules. So there's a strong sectoral play. Whereas if you go into mid and small cap, especially not individual stock picking by investors, but into funds do a bottom up in the mid and small cap, right? So you actually then get the better quality companies independent of sectors. So what happens is when you have a very strong tilt towards, let's say, growth, for example, it makes sense to be in the mid and small cap. And the past history tells you this, right? Your 2003 to 8 time frame, I go back to that, right? When the economy was doing well, your GDP growth went up from 5 to 8%, everything was going well. Mid-cap indices, right, delivered something like 9x returns against a Sensex delivering 5x and small cap delivering 13x. So I'm saying when the path ahead is very clear in terms of GDP growth, it makes sense to be more in mid-caps and small caps. Then large caps are more of defensives because valuations are generally high. So it's a safer bets in terms of the fact that those high valuations mean these companies are expected to deliver high returns and chances for surprises are that much lesser. So while always an investor, you're right that he should always allocate something to every cap spectrum. The relative tilting, always that's where an advisor comes to play, right? You go to your advisor and say, where should I put money? If he's going to say, always put it in diversified, then the value of advisor kya hota hai? And then what happens? So I'm just saying smart investing means that while you maintain a broad allocation to all cap spectrums, you do tilt the thing based on the domestic outlook, international outlook, what's happening on oil, what's happening in energy, where do you put your money, which stocks you pick. So I think once you're coming to an expert like a mutual fund, once you're coming to a mutual fund, it itself is diversifying, right? Your role then is to just look at it from a broader perspective and maybe tilt it according to the flavor
my
of
only
this.
point was that a multi-cap fund in which can go up to 70% large caps, right, 30% mid caps, that should ideally work across time frames, right? I mean, I take your point that when you were confident that growth is coming, mid caps and small caps will do a lot better, right? They've got room to grow essentially. And
so let me answer your question in a slightly different way, right? Investor behavior is not driven by, let me explain it a little bit. Let's say bank deposits are giving you 7%, right? So when a particular cap spectre is doing very well, right, that will deliver 20-30% return, and the cap spectre which is not doing so well will give 1 or 2% return, right? So a multi-cap will give you blended average, let's say 10% across market cycles. The problem is investors, when they get that 10%, though they're getting 3% alpha over their bank deposits, they're not happy because the money they put in the mid-cap fund delivers 20%. So the greed of investors means that while it may be sensible what you say to be happy with a 10% across market cycles, the fact is you're not going into the stock market, you're trying to create long-term wealth, right? And if you can create it at 15%, 20%, why settle for 10%? So I think that's the sentiment, the emotions of investors.
Okay. The point about growth coming back, and if you're confident, then it's better anyway to stay in mid caps, right?
Yes.
Mid cap small.
Yes.
Are we confident that growth is coming back strongly?
Now, don't you think it has already come back strongly? Because if you're at just under 8% right now, when the rest of the world is at low single digits, so why are we still saying 8 to 10 is the key incremental that I'm looking at?
No, I'm talking about earnings growth. I'm not talking about corporate GDP growth.
But that should automatically translate, because even now, you're thinking that over the last year, earnings growth hasn't been good, right? If you take away PSU banks, which dominated the underperformance, the Nifty and Sensex have delivered 13% ex-PSU bank year on year. So earnings growth is there strongly in sectors. So when you go back, when you ask the question about multi-cap funds, the real question is sector allocation and not cap allocation. Right? There are sectors which have delivered very good returns even in a time when the GDP growth hasn't been double digit, as you say.
Yeah, absolutely.
So
absolutely.
That's where a mutual fund comes to help you, right? By doing the sector allocation. For example, rural as a theme, right? How many people read it? Because there was a bad monsoon, you don't go into it, right? But for a minute turn focus on our company, we had this fund called Rural India. Now it underperformed whenever there was a drought, but over the last 1 year, when Sensex has been, let's say, 1 or 2%, mid caps have delivered about 10-12%, this fund has delivered 20%, right? So the sector, the fact that rural is going to do well, so if 20% is the stock appreciation, obviously earnings growth in that sector has been very good. So I'm just saying, even in this, earnings growth in sectors which are linked to the Indian economy are very healthy. That's why I'm saying waiting for growth to happen. What you're saying then is, when is broad growth across all sectors going to come back, right? So that's again, say, commodities.
No, my only point was that, the case for equities is not selective. I mean, you can make, it depends on the fund manager, right, at the end of the day. And the selection, even bear market, there is some bull market going on somewhere. It's just that it's very hard to pick them, right?
Yes.
It's, I agree with that point, absolutely. You have a rural fund, right? Rural India Fund. Right. And you said last 1 year it's returned 20%.
20%.
Right. And what's the broad sort of composition of the fund?
So it focuses on agro inputs, fertilizers, pesticides, chemicals. It focuses on rural consumption themes. So payment banks, or banks which generally will benefit from the whole consumption drive in rural. It also has a component to infrastructure because a lot of roads and other things will generate employment there. So it's actually not a sectoral fund, it's a thematic fund which diversified across sectors. But it focuses on companies which have a rural tilt in either their top line or their bottom line. So I think that filter to pick has worked very well, and we think over the next 2 years it should deliver very good.
When was the fund launched?
The fund was launched way back in 2006.
Right.
Okay, so it's been through its cycles in terms of, whenever. See, the name rural connotes a connotation that is an agri fund. So people tend to look at it that way. But it's not a pure agri fund.
Sure.
It's a
What's been the performance since inception?
Since inception, I think over the last 3 years, it's been 24%.
Okay.
Since inception, 6 years, I'm not exactly the number.
No, last 3 years, 24%.
Yes.
This despite
CAGR, yeah, despite a bad monsoon. Because the most recent positive impact has wiped off the negative of the thing.
Yeah.
So the last 3 years is 24%. 2 years also is 22%.
Okay. All right. Mr. Subramaniam, thank you very much for your time. It's a pleasure chatting with you.